What's going on, everybody? Stas here. Welcome back to another video. So today we're going to be talking about Beyond Meat. Is Beyond Meat stock a buy in 2021? Maybe we should stay away from the stock. And I want to dive deeper into the company in general, break down some numbers, their partnerships, their products, their most recent earnings report. And later on in the video, we're also going to break down some technicals and talk about some risks involved with this company. So if you guys find value, hit the like button, subscribe to the channel, join the Strive Smart Discord chat, the Facebook group, get yourself 4 stocks from WeBull and $30 from M1 Finance. All of those are free and linked right down below in the description box. So let's get into it. First and foremost, what is Beyond Meat? And I'm sure 95% of you guys know this, but for those that don't, Beyond Meat is a food company. They manufacture, market, and they sell plant-based meat products in the United States and internationally. And the different products they have include Beyond Burger, Beyond Beef, Beyond Sausage, Beyond Breakfast Sausage, Beyond Chicken, Beyond Fried Chicken, the meatballs, Beyond Meatballs, and there's many more products as well. And they were actually founded back in 2009, and Beyond Meat products are designed to have the same taste and texture as animal-based meat while being better for you, people, right, humans in general, and the planet, the environment, because we all know that traditional meat, the way, the meat industry works, it is not so great for the environment. So that is what Beyond Meat pretty much is. They make fake meat, chicken, sausage, all that good stuff, and they cater mostly to people, obviously, that don't eat meat, people that don't eat animal products, vegans, even vegetarians. And a lot of these people, myself included, right, meat eaters, they actually like the product that Beyond Meat offers, which again is fake meat. It's pretty interesting the way that they actually do this. And they have a lot of partnerships. Let's dive deeper now into where you may actually see Beyond Meat products out there. They actually recently partnered with Pizza Hut to create the Beyond Pan Pizza, which has Beyond Italian sausage on it. And this looks pretty dang good. I actually have never tried this one myself, this pizza from Pizza Hut, but it does look very good. And they also partnered, I forget when this was, but I've actually tried this product. They partnered with Dunkin' Donuts, creating a breakfast sandwich, which again, I've tried it and it's pretty good. You can't really tell the difference, guys. It's crazy how well they actually are doing this in terms of imitating the actual meat. And they also, on top of that, have a relationship with McDonald's. And recently, a couple days ago, before me filming this video in the beginning of 2021, they told us that they're now working with Taco Bell. They're actually teaming up with Taco Bell to produce an innovative new plant-based protein. And we don't know exactly what that's going to be, but these items will be tested in the markets within the next year. So they have a lot of partnerships. And on top of that, they have even more. Let me show you guys this screenshot right here, which is pretty interesting. You guys can see here, they're in many U.S. retail locations, many food service locations as well, and they're internationally recognized on top of that. I mean, take a look. U.S. retail, we have Walmart, Sam's Club, Kroger, Target, Costco, Albertsons, Whole Foods, Sprouts, BJ's, many U.S. retailers. And you guys can see the numbers here at IPO. When this company IPO'd, they had roughly 17,000. They were in roughly 17,000 U.S. retail locations. And now, as of September 2020, a couple months ago, they're in almost roughly 28,000. So a lot of retail points of distributions across the United States. They've been growing in terms of carrying the Beyond Meat product, which I'm very fond of. And when it comes to net revenues within these U.S. retail locations, you guys can see in 2018, $50 million. In 2019, they did $129 million. So nice growth there. And when it comes to 2019 year to date and 2020 year to date, they did $94 million. net revenue in 2019 year to date, and in 2020 year to date they did $202 million in net revenue. So that's pretty solid growth there. And on the right of U.S. retail, you have U.S. food service. And this is interesting, and we'll talk more about this in a second. But you guys can see in 2020, the growth actually slowed down a bit. And that is because of the CV, right? You can see here in 2018, they did $21 million in net revenue. In 2019, they did $70 million in net revenue. And in 2019 year to date, they did $44 million. And in 2020 year to date, they did $45 million. So they didn't jump up too much when it comes to U.S. food service there, and that is a lot due to the CV, and we'll get into that in a second. But they still are in many locations, right? They have partnerships with Dunkin' Donuts, Denny's. We talked about, McDonald's. They're in the works with McDonald's, Taco Bell. On top of that, we have Pizza Hut. We talked about that before. TGI Fridays, Dunn Brothers, Corner Bakery, Burger Fi, Golden Crust. So many partnerships. And back when they IPO'd, they had roughly 12,500 food service outlets across the United States carrying the products. And now, back in September of 2020, a couple months ago, they had around 42,000 locations, which is amazing. And on top of that, they're in international locations as well, and the revenue internationally in 2018, 2019, between those periods, it grew a lot, but we saw a bit of a stagnation here in 2020 year to date, and that is again due to the CV. But we can see they had about 1,650 locations internationally at IPO roughly, and just take a look at the exponential growth we've seen since then. We've gone from 1,650 locations now to 52,000 in September of 2020, and these locations include, China, Aldi. We have locations in Greece, Brazil, all over the world. Alibaba, again, in China. So that is great to see that we are growing internationally within the U.S. as well, but we are seeing a bit of a slowdown here in the growth, which we'll talk about in a second. And this slide here shows even more notable updates about the company. You guys can see here the Pizza Hut relationship, KFC out there in China, and Pizza Hut out there in Belgium. We can see the Fridays partnership here, new customers coming in. And then on the middle slide, the middle portion of the slide, we can see here the different products. Beyond Sausage Links in 2020, they introduced that. They have Beyond Meatballs, the sausages, the burgers, the fried chicken. And I shop, obviously. I go out into the supermarkets and get food, and I've seen these different products. I mean, I've seen a lot of these on the shelves, and I haven't tried all of these products, but I have tried the burger. I've tried the sausage. I haven't tried the meatballs yet. I haven't tried the fried chicken, but I've also tried the ground beef. And honestly, again, I'm not a vegan. I'm not fully plant-based, but honestly, since trying these products, hey, I kind of like them, and I've just been incorporating them into my diet kind of for fun, just testing them out. And I've honestly been a consumer of Beyond Meat for a while at this point, for over a year, and not consistently, but over time, I've just been trying their products here and there, and I've tried the Dunkin' burger or the sandwich like we mentioned earlier, and I'm excited to try anything new that we see coming up, probably from Taco Bell, other locations. So take a look at this slide, guys. Very interesting. Pause this if you want to, and now let's talk about their most recent earnings report. So in Q3, they had net revenues of about $94 million, and that wasn't that impressive when you look at the year-over-year growth. It was only an increase of 2.7%, and we'll talk about that here in a second, but first, let's look at gross profit. Gross profit came in at $25.5 million, or a gross margin of 27% of net revenues, and adjusted gross profit was $27.3 million, or an adjusted gross margin of about 29% of net revenues, reflecting exclusion of expenses attributable to the CV, and they saw a net loss of $19.3 million or 31 cents per common share. Adjusted net loss was $17.5 million or 28 cents per common share, reflecting exclusion of expenses attributable to the CV. And like I said earlier, guys, that growth in terms of net revenue isn't that impressive, honestly. And you can see the screenshot here on the screen. Take a look from 2020 to from 2019 to 2020. You can see retail, the different segments here of how they make money. Retail, their sales went up from 44 million to 62 million. But take a look here, food service, that is where they struggled a lot. Food service revenue in 2019, 3 months ended 2019, was 18 million, and in the 3 months ended in 2020, it was only 16 million, guys. So they didn't really grow at all. In fact, they shrunk when it comes to food service, and that is fully attributable thanks to the CV. No doubt about it. That is what's struggling or hurting this company and causing them to struggle in the food service segment. And that was here in the U.S., those retail numbers where they grew, and the food service numbers where they shrunk a little bit. And in terms of these numbers internationally, we saw retail sales back in 2019 at 6.2 million, and they grew to about 8 million in 2020 for the 3 months ended in September. And we saw food service internationally also get hit, much worse than what we saw in the U.S. In 2019, food service was at $23 million, but in 2020, it dropped to $8 million. So you guys can see the CV had a pretty big impact on this company when it comes to the Q3 numbers. And when you're looking at these numbers, these are the 9 months ended numbers for the first 3 quarters of 2019 and 2020. You guys can see retail in the U.S. grew a lot, 202 million in 2020 versus 94 million in 2019 for those 9 months. And the food service barely grew from 43 million in 2019 to 45 million in 2020. That is for the US. And internationally, we saw retail back in 2019 at 10 million and in 2020 at 23 million. So nice growth there for the retail side of the business. But food service internationally in 2019 was at 51 million versus the 33 million. So they took a pretty big hit there, from 51 million to $33 million in 2020. So needless to say, guys, the company has been, I don't want to say struggling a ton like some other companies out there, but it has seen its fair share of struggles during this crisis, especially in that third quarter. And Ethan Brown, the CEO, said, quote unquote, "Our financial results reflect a quarter where for the first time since the pandemic began, we experienced the full brunt and unpredictability of CV on our net revenues and accordingly throughout our P&L. Unlike the second quarter where record retail buying and freezer loading by customers offset the deterioration of our food service business as CV stay-at-home and related business measures set in, the long tail of retail stockpiling by customers coupled with continued challenges across the majority of our food service customers led to Q3 results that were lower than expected." Ethan Brown also said, quote, "We have not, however, blinked in our focus on the expanding long-term opportunity before us and continue to operate our business locked in on this exciting long-term growth trajectory. Rather than curtail activities in reaction to transitory macroeconomic conditions, we continue to invest in the pillars of our future growth, in capabilities, infrastructure, and markets that support our global vision and provide the highest long-term return to our investors." So they're seeing some short-term headwinds, no doubt about it, due to CV. And you guys can see back when this company reported those earnings back in the beginning of November, the stock actually went down from about $170 all the way down to almost under $100. It went down to about $106, which was a drop of close to 40%. So a lot of people out there, I know from just talking to people, a lot of people actually saw this as a good opportunity to buy in on some short-term pain. And when you're looking at, long-term investing, right, these are, and I'm not saying to buy right now, but when you're looking at long-term investing, you typically like to buy, it's a good idea, at least in my opinion, to buy into a company that you believe in long-term during a time of weakness, during a time when you're seeing a short-term drop. And that is what we saw with Beyond Meat, and quite frankly, that is why I'm covering it in today's video. And since that drop, you guys can see we did not break $108, $105. That actually held as a pretty strong support, which you guys can see if I pull up this 3-year chart. Let's take a look if we can see it. Right around 100, 105, that has been a support really for the whole year of 2020, and it actually was a resistance, this general area, back in the beginning of 2020. So the fact that Beyond Meat is holding 105, 110, 120, now it's climbing back to the 140s, that is a pretty good sign for the bulls out there, technically speaking, and we are seeing some pretty good strength above that level. In fact, these past couple of weeks, we broke out of 125, which was also a big resistance. We broke out of 135, which was also a big resistance. And now we're about to test $145. And that is also a big resistance, stemming back from all of December pretty much, in November as well, back in July, August, September, and also back in May. So needless to say, Beyond Meat is showing some upwards momentum. It's starting to pop up. And if we test $145 and break that point, honestly, in the short term, I could easily see Beyond Meat $160, maybe even higher, $165, maybe $170 plus here on Beyond Meat. And this recent spike up that we are seeing, that is thanks to the Taco Bell partnership that we are seeing. Again, they are looking to test out products, new plant-based products with Taco Bell in the next year. So that is why we are seeing this big spike. And although I love Beyond Meat's products, they are growing, it's very hard to value this company. Like we've said with other growth stocks, when a company just IPOs, they don't have much track record, it's kind of hard to determine how quickly the company could grow and how quickly the stock could grow. And at this point in time, one of the big key risks is they have a pretty lofty valuation. They currently have a 19.3 price to sales ratio, which compared to other companies in the foods business, that is very high. But you could also argue they have a lot more growth than some of these other companies in the food industry. But on top of that, you also have to ask yourself, is that valuation worth it for how much the company is growing? And for me, guys, I think it is. This is one of those new food tech businesses out there that they're literally using technology to create these products. So you have to understand that is baked in to the valuation. So that is one risk, a pretty high valuation. But on top of that, yeah, there is a lot of growth. So you have to find, what works for you there. And another big thing is they haven't even turned a profit yet, Beyond Meat. And you could also argue that you shouldn't be concerned about that, Stas. They're growing. They're still a new business. They just IPO'd a couple years ago. Give them some time and they will make a profit. You could argue that, and I agree to a sense. They are doing well in terms of revenue. There is a bit of stagnation with CV, but overall they are growing well. But I would like to see this company turn a profit in the next coming years. I'd feel more comfortable with investing more into them if they did do that. And another big risk is, who's to say that some of these big players that they're partnering with, Taco Bell, McDonald's, Starbucks, who's to say these companies won't make a plant-based product of their own. That's always a risk, and you could argue that Beyond Meat has it more dialed down. They have the process. They have a very good product that it's kind of hard to beat. You could argue that, but on top of that, you have to always think in the back of your head, who's to stop, one of these other big companies out there from coming into the game and just completely undercutting Beyond Meat? Who's to say that can't happen? I think that could happen, which is a very big risk when you're looking to invest in Beyond Meat. So those are some key risks, guys. We talked about some technicals. We went over some numbers. And before I forget, one big thing coming in 2021 and beyond is this brand new Beyond Meat headquarters, which is great. This is a new big facility that they're going to be doing a lot of stuff in, research and development, products, manufacturing, all that great stuff. And this is actually going to be a 12-year lease in which they're going to see roughly a 300,000 square foot facility being built in El Segundo, California, and this site will serve as the company's new state-of-the-art headquarters, making it one of the largest and most technologically advanced plant-based research center. The cutting-edge campus is slated to open in the fall of this year and is a substantial increase in the company's footprint that will support best-in-class innovation, advanced research labs, and the incubation of big ideas that further disrupt and define the plant-based market of the future. So that's exciting for this year and beyond when it comes to Beyond Meat, no pun intended there, guys. And yeah, those are some things about the company, some thoughts there, key risks, numbers, all of that good stuff. And as for me, I don't have a position quite yet in Beyond Meat, but I am thinking of buying into it. And I've been thinking about buying into it these past couple of weeks here, guys, but I haven't quite yet struck with buying a position. And it's the same thing with Tattooed Chef. Quite honestly, both of these are ones that I want to buy, but I haven't done so quite yet, and I probably will here in the next couple of weeks. And let me know down below in the comments what you guys are up to. I would love to know. As always, are you buying this stock, staying away from it? Let me know in the comments. And if you guys enjoyed the video, hit the like button, subscribe to the channel. Don't forget to join the Strive Smart Discord chat, the Facebook group. Also, don't forget to get yourself 4 stocks from WeBull. Those are valued up to $1,600. All you have to do is deposit $100 and you get those 4 stocks. You could also get $30 from M1 Finance. Both of those are free and linked right down below in the description box. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys.